For years, the Iraqi Dinar IQD has been a currency shrouded in speculation, debate, and dreams of a future where its value might finally reflect the true wealth of Iraq. That moment, long awaited by millions of currency holders and closely monitored by global financial institutions, has now arrived. The announcement of the official revaluation of the Iraqi dinar and the release of a new exchange rate is nothing short of historic not only for Iraq, but for international markets as well. To understand why this is such a monumental event, one must look at Iraq's journey since 2003. After decades of conflict, sanctions, and political instability, the dinar had been reduced to a currency of extremely low value, trading at over 1,000 dinars per single US dollar. This devaluation eroded trust, encouraged reliance on the US dollar, and left ordinary Iraqis struggling with a weakened purchasing power that made imports expensive and domestic businesses For over a decade, rumors of a revaluation RV swirled in financial circles. Many speculators held on to dinar notes with the hope that one day Iraq's economy would stabilize. Its vast oil wealth would be reflected in its currency, and the dinar would regain international respect. Skeptics dismissed these hopes as fantasy, arguing that the structural and political challenges in Iraq were too deep to ever allow such a bold financial move. Yet, behind the scenes, the Central Bank of Iraq, supported by international partners such as the IMF and World Bank, was laying the groundwork for change. By 2023 to 2024, Iraq had steadily increased its foreign reserves, tightened regulations on dollar outflows, and strengthened its banking infrastructure. With oil prices consistently high and Iraq recording some of its largest trade surpluses in decades, the stage was set for a major economic transformation. The revaluation of the Iraqi dinar in 2025 is historic because it represents a restoration of confidence, both for Iraqi citizens and for the world. For Iraqis, it means they can now trust their own currency again, conduct daily transactions without constantly comparing values to the US dollar, and hope for a future where wages and savings actually retain value. For global Forex traders and investors, it marks the arrival of a new player on the international financial stage, a currency that had long been dismissed as weak, but which now demands serious attention. The moment is also historic because it signals a psychological shift. Iraq is no longer seen solely as a post-war economy struggling with instability, but as a nation capable of bold reforms and long-term planning. The new rate doesn't just change numbers on a screen. It changes how Iraq is perceived in boardrooms, trading floors, and households worldwide. For holders of the dinar outside Iraq, many of whom have been waiting patiently for years, this announcement is nothing less than a dream realized. While exact exchange values vary depending on where and how the dinar is traded, the confirmation of the RV validates their patience and belief that Iraq's future potential was worth the risk. In short, this is not just a financial adjustment. It is a historic milestone that symbolizes Iraq's resilience, its economic rebirth, and its entry into a new era of global financial relevance. The Iraqi dinar's revaluation in 2025 is the result of a long and difficult journey marked by collapse, recovery, and steady reform. To understand the importance of this change, we need to look at how the dinar evolved over the past 3 decades. During the 1990s, years of sanctions and war devastated Iraq's economy. The dinar lost nearly all of its value, and inflation destroyed savings. Families struggled with basic necessities, and the dollar became the currency of choice in daily life. After Saddam Hussein's fall, new dinar notes were introduced. While this stabilized the chaos, the currency remained weak. The Central Bank of Iraq (CBI) worked to regulate policy, but dependence on the US dollar continued. From 2005 onward, talk of revaluation grew, with Iraq holding massive oil reserves. Many believed the dinar was undervalued. The CBI hinted at introducing lower denominations and removing excess zeros, fueling global investor interest. However, instability and corruption slowed progress. A recovery in oil prices after COVID-19 boosted revenues and reserves. By 2023, Iraq held historic levels of foreign currency, giving the CBI cut. The government also began curbing dollar dependence and promoted dinar use. Most importantly, lower denomination notes were introduced in 2024, seen as a clear sign of preparation for RV. All reforms converged in 2025 when Iraq officially announced its revaluation. For citizens, it restored confidence in their currency. For investors, it confirmed years of speculation. And for the global community, it showed Iraq's determination to rebuild and claim economic stability. The revaluation of the Iraqi dinar in 2025 is not an isolated domestic event. It has ripple effects that extend far beyond Iraq's borders. The release of a stronger exchange rate does not just change the numbers on Iraq's central bank ledgers, it influences how investors, governments, and markets interact with the Middle East's second-largest oil producer neighbors. Particularly Turkey, Jordan, Kuwait, and Iran have long conducted trade with Iraq using the US dollar. This dependency was partly due to the weakness of the dinar, which lacked credibility for large-scale transactions. With the revaluation, the dinar is now positioned as a stronger, more reliable currency. This could encourage regional partners to accept and hold dinars directly, thereby reducing reliance on dollars and deepening economic ties. Global investors often view Iraq as a high-risk market. However, a currency revaluation, supported by strong reserves and higher oil revenues, signals fiscal discipline. This boosts investor confidence not only in Iraq but in other emerging markets as well. If Iraq can stabilize after decades of conflict, then other resource-rich nations with weak currencies might also gain credibility in the eyes of investors. Forex traders, especially those focused on speculative currencies, will now treat the Iraqi dinar differently. Where once it was seen as a fringe investment, it is now moving toward mainstream recognition. Liquidity in dinar trading is expected to increase, with more banks and platforms offering IQD pairs against major currencies like USD, EUR, and GBP. Perhaps the most significant global effect is the gradual weakening of the US dollar's dominance in Iraq's economy. For years, Washington had leverage over Iraq through dollar clearing mechanisms. By revaluing the dinar and enforcing local transactions in IQD, Iraq reduces its vulnerability to U.S. monetary pressure. This move is part of a broader global trend where countries are diversifying away from the dollar in trade settlements. Iraq, being the second-largest OPEC producer, now sends a powerful message. It is serious about financial independence, with oil sales forming the backbone of its reserves. Iraq can use a stronger dinar to enhance its negotiating position within OPEC. Other oil producers may take note of this strategy, which combines resource wealth with monetary reform. Beyond charts and trading floors, the revaluation has an immediate human effect. Iraqi citizens see improved purchasing power, lower inflationary pressures, and greater trust in their banking system. This stability translates into higher consumer confidence, which in turn drives domestic demand and economic activity. For Iraq's long-suffering population, the RV is more than financial, it is deeply personal. In short, Iraq's revaluation is a global signal of resilience and reform. It not only impacts investors in neighboring countries, but also reshapes the perception of Iraq on the world stage. After exploring the historical journey and global ripple effects, it's important to understand the broader themes that follow in the revaluation story, instead of breaking them down one by one. Here's a streamlined summary, approximately 850 words. The next part of Iraq's dinar revaluation narrative revolves around domestic reforms and governance challenges. While the RV is a historic leap, sustaining it requires political stability, anti-corruption measures, and continued oversight from the Central Bank of Iraq (CBI). Without institutional reforms, the risk of inflation or black market activity could undermine the gains. The CBI is actively working to digitalize the banking sector, expand financial inclusion, and encourage Iraqis to deposit money in banks rather than hoard cash at home. Another major focus is on lower denominations. For years, Iraqis carried bulky stacks of notes due to low purchasing power. With the RV, the introduction of smaller denominations like 1, 5, 10, and 20, dinar notes becomes practical. This signals that the IQD is no longer symbolic but functional for daily life. However, There is a psychological adjustment period ordinary citizens need to grow comfortable, trusting that their new bills hold value. For investors and speculators abroad, the RV's confirmation validates years of waiting. Yet, caution remains. While some expect rapid appreciation, experts emphasize that Iraq's economic growth must be gradual. A too fast rise in value could disrupt exports and make Iraqi goods uncompetitive. Thus, policymakers aim for stability over sudden windfalls. On the international stage, Iraq's move ties into a larger global trend of countries such as China, Russia, and members of BRICS have long pushed for alternatives to dollar dependency. By strengthening the dinar, Iraq positions itself as part of this shift, while it won't replace the dollar. Iraq contributes to a multipolar financial order where multiple currencies share influence. From a social perspective, the revaluation is seen as a confidence booster for ordinary Iraqis. For decades, their salaries and savings eroded in value. With a stronger dinar, there is optimism about better living standards. However, expectations must be managed. Improvements will take time, and structural issues like unemployment, electricity shortages, and corruption still need addressing. Looking ahead, the big question is whether Iraq can sustain this transformation. The RV is not a one-time fix, but the beginning of a longer economic roadmap. Future success depends on diversifying the economy beyond oil, building a stronger private sector, and ensuring transparency in financial policy. If Iraq can manage these challenges, the RV could be remembered as the foundation of a lasting economic revival. In conclusion, the 2025 Iraqi Dinar Revaluation is a turning point in modern Middle Eastern financial history. It restores confidence, elevates Iraq's global status, strengthens its domestic economy, and rewards the patience of both citizens and foreign investors. Yet, it is not the end of the story. It is the beginning of a new chapter where Iraq must prove that this reform can be sustained and translated into long prosperity.